What's up, guys? It is Thursday, March 30th. It's 10:33 a.m. and this is the crypto market update. How about that, huh? For those numbers. But let's get into it. We're going to cover first off crypto total market cap. And if you're new here, subscribe, hit the notification bell, leave a comment and a like. Let me know in the comments as well too, because I'm going to be making that XRP and XLM specific technical analysis covering all the angles. But also let me know what other cryptos you'd like me to do that for, because I believe that we're headed into a big moment, and I believe that it could be the moment that we've all been waiting for. So I'll show you that in that video when I release it later today for XRP and XLM. So let me know in the comments what other coins you want me to do that for, and I'll do it. And yeah, so let's dive into it. Actually, instead of the total crypto market cap, let's start off with the USDC plus USDT against the total crypto market cap to kind of get a gauge as to where we're at with this. We have like 3 charts that we look at to know if we're in a bull market or bear market. And we were calling that back here like in January, and we came down, and that's when we had our first rally. And then we came up, and that was our kind of bit of a lull in the market. And then once this slammed down again in March, when we started to run up again. So we need to see us break through kind of where we're at right now for us to really go on a mega rally, because that's where we found an area, a support back here. Once we kind of had our uptrend support, we're right back down to it. And really, if we break down below this, our next level is down here. So that's a big move down, which would cause cryptos for a big move up. So that's what we're watching there. We want this chart to go down, and the 1 week shows the momentum to the downside, the 2 week as well too, and the 3 week as well, showing mega momentum to the downside. All right, so that checks out good. So let's go to the next chart, which is the Nasdaq 100 against Bitcoin. And let's see what's going on over here. All right, so this chart is saying on the 3 week chart, we want to see this break down, because every single time we break down from that upward kind of channel, we had shown this many times before. This is the start of our bull run for crypto. And even looking at when the stock RSI has a cross down, like right here, bull run for crypto all the way until here. We actually came back up, but we still had another bull run in crypto as soon as we crossed down. Bull run in crypto, bull run in crypto, bull run in crypto, and then bull run in crypto right now. So there's only been a few times that this has happened for the past 8 to 10 years. We have once, we have twice, we have 3 times, we have 4 times, and now we're heading into our 5th time as we speak. This just happened. So we're in a bull market for crypto until we see a stock RSI kind of cross back up through the 20 line. Once that happens, we're going to get much more cautious, because every single time now, if we look at the flip side, bear market for crypto, bear market for crypto, bear market for crypto, bear market for crypto, bull run for crypto. So we really have a good gauge as to whether we're going to be going into a bull market or a bear market. And right now it's screaming bull market. And then if we look at the flip side, the inverse of that, Bitcoin against the Nasdaq, we're on the 10-day chart, and we just got above the EMA ribbon, and we came down and actually tested it as support. And right now we're having a long wick as we speak. So that is a great sign, because we want to be above that, because this was bull market for crypto when we're above it, bull market for crypto when we're above it, bull market for crypto when we're above it. So by us getting above there, solid, and just kind of points to the fact and more kind of validation that, yeah, we're in a bull run for crypto, especially because we're seeing the TSI cross up through the 0 line, TSI through the 0 line. When we had our correction back here in 2019, 2020, we were actually riding the 0 line. But once we get above, it's game on. Now let's go to the total crypto market cap. The total crypto market cap is flashing a 3 week buy now signal. It's the second time it's ever flashed. I wish this chart would stretch out all the way till 2013, something like that, but it only goes till 2015. So there's not enough data to be able to get the buy now or have the indicator have the respective parameters to flash a signal back here, because you need enough data for it to work. So by this time we had enough data back here. So it hit the sell now at the top. Like bam, hit the sell now, hit the bottom of the bear market, buy now, hit the top, and it's flashing a buy now as well too. So what I believe is we're starting our first, we're going back into our bull run, our cycle. Doesn't mean we're just going to fly to 100K right now. When this flash, we had maybe 6 more weeks of price action upwards, and then we kind of pull back a little bit, and then we went for the big one. But that just signifies that the macro trend is flipping to a bull market, just like this signified it's flipping to a bear market. We went down, bull market, we went up, bear market, and see how it came back up a little bit. But it's still, the macro trend was changed to a bear market. So this is the fake out of all time. So now we're flipping the macro trend to a bull market. Like even if we did something like that, say we just repeated it, we could be seeing us go up. Maybe we hit 1.7 trillion. Maybe we come back down later this year, and then we go into our huge run 2024. That could be a possibility as well too. Although I don't think that's going to be how it plays out. We're just going to have to watch all the key things that we look at to gauge the data in front of us when the time comes. But for now, the market's flashing up and the dollar is flashing down. Now let's actually get into bond yields and the dollar. So I'm going to go to the daily chart. For the bond yields, the daily chart, we are seeing the momentum starting to pick up again. We did find support on the 200-day moving average. Tested this level like 3 times now. So something's got to break here soon. If we're going to kind of get rejected, it would probably happen here and we'd start to roll over. I would say we have to watch the key levels from this top to this bottom. We're going to do the 786 to the upside, which is 3.895, where we need to get rejected at. If we don't, we break above it, we're going to see maybe 4.65%. And let me actually pull this over and let's take the overall bigger macro move and put it right here. And then we also have 4.083% as that 786. And that's actually where we came up and got rejected to right there. So we have our rejection levels at the top. Let's look at the levels that we need to break to the downside to be able to continue lower. I'm going to put that key level right there. But also, let's put the 786 of this micro move from the low to the high. We need to come down, and then we would probably break this point, and then it would be game on. Then we can start targeting 3.11, 2.83, and start targeting these breakdown levels like that, which probably coincides with the bigger macro move of this low to this high. Yep, right on the money. Stretch it out, and that's 2.83% right there. So yeah, we got our levels. We know what to watch, and we're just going to let it do its thing. It's going to just range until it breaks one of these key levels. So now let's go to the dollar. The dollar right now broke down. Let me go to the 6-hour chart. Yep. So we've been breaking down. We're right on the edge. The dollar is literally right on the edge. If I take this low to the high up here, we're right at the 786. And let me pull this right to it. Yep. So we tapped the 786 here. We bounced, got rejected at that key level. So that's a key level we got to watch. So right here, key level of resistance. And right now, I think we're at the 786 of this micro move, because this was the macro move from this low to this high back down. But also we have this little micro move, which is this low to this high, stretch it out. And we broke the 786 here. So we should theoretically come down to the 101.055, but the macro move takes precedence over the micro move. So we still have this level right here that we need to break through for us to be able to continue lower for the dollar. And if we do break that level and we come down to 101.055 and we break that, now we can start targeting the breakdown extensions of 99.66, 98.284, and then we have the 1618 of the macro move saying 97.842. Then we had 97.443. So to me, I love when the micro and macro moves line up and kind of are matching each other of certain levels. So the 1618 breakdown of the macro move coincides with the micro move breakdown of the 3618 and the 4236. So I like this area as far as where we would fall down to for the dollar. Let me kind of mark it here. I would say that would be the level we would fall to if we break down from this level right here. So that's what we can target. And then we'd want to get rejected by this horizontal line, but also I'd probably say with the EMA ribbon and the 200-day moving average, we could say this range right here. This is where we want to get rejected. And then we want to break this support box and turn it into resistance. And then this would be our target of the breakdown. So that's what I'm watching right there. Let's go to a higher time frame, like 12-hour chart. Yep, momentum's still down here. We're EMA ribbon's red, 200 moving average flipping us over. Let's go to the 1 day. Yep, we're below the 0 line. Momentum's headed down. EMA ribbon still red. We're below the 200-day moving average. Let's go to the 3 day. We're crossing back down right there. We have the 200-day moving average sitting right at that green box. So that's why it's an important area to break down from right there. And then we would target there. Let's go to the 1 week. Yeah, and then we have the 1 week kind of pressing up here, which would hit our first kind of extension level of a breakdown around 99.66. But look at the 1 week. Momentum headed down. We're about to cross. Now we're not. Momentum headed down. We got rejected by the RSI. So definitely great signs of a dollar dump for sure, especially because we saw, I don't know if you guys saw the video from the other day with the Kenya president talking about in project, I think it's Operation Sandman. I read about that. I was like, damn, this is crazy. And with the Kenya president saying in a matter of weeks, yeah, I mean, the hyper boom for cryptos is looking more validated every single day with everything that's happening here. So exciting times, man. XRP at 54 cents. XLM over 10 cents. I really feel as if we haven't even seen the move yet, to be honest. But let's keep going because we're going to get to that at the end of this. So if you're new here, subscribe, hit the notification bell, get updated when we release these market updates and newsletters and deep dives. You're not going to want to miss it. And come join the Discord. The link's in the bio. Come join there. All right. So the stock market is about to press through 13,000 right now. So we're getting some signs that we've already hit our bottom in some of these markets here. And we're starting like a new kind of rally uptrend. Maybe it's a relief bounce, or maybe it's the blow off top kind of run. We're going to have to take it for what it is when it comes. But right now we're seeing signs that the momentum to the upside for stocks, for cryptos, for commodities, and then the dollar and bond yields are showing to the downside. On the 5-day chart, we're getting above the EMA ribbon here. We're above the 0 line of the TSI. We have the pink over the blue. Let's look at the 1 week. Yep, we're getting above right here. We want to see this curl and flip to green. Definitely still not necessarily out of the woods yet, but we're showing signs of curling. We're really trying to curl around like this. So maybe if we do come down, we're not going to get, maybe it's something like that. We just have to pay attention to it. But right now, this is a great sign. So now let's go into gold. Right now, gold's at 1971. It's a 4-hour chart. Let's go to the daily. Yeah, look at all the wicks there. So it's maintaining where it's at. A huge volume spike right there. Let's go to the 1 week. Yep, 1 week's holding above. So our key level to maintain above for gold is right here in like 1937. Definitely a key level where we found some support. We couldn't do it. Rejection. Tried to get above, couldn't do it. Rejected. And now we're above it right now. So I'd say we want to maintain above that and start seeing this momentum really kick in. And we do have the momentum on the higher time frame. So that's a solid sign. Now let's go into Bitcoin. So Bitcoin's right now is at 28,400. We actually came up to tap 29,150 this morning. So let's go to a 30-minute chart. Let's take a look at it. So right now we have, let's say this low to this high. We're at the 786 as we speak. So, and we have some signs that the momentum in the short term might be curling over here. So if we do break down from this, we have our breakdown extension level of 27,453. That's where we'd probably fall to if we do fall. And that probably coincides with this low to this high here. Yeah, it's close, I would say. So we have 27,454 or 53 right here. And then we also have the 786 of the macro move, 27,173, where we'd need to hold. So now let me take this off. Let's go to a higher time frame. So we most definitely want to see the stock RSI head up through this 50 line, which it's basically there right now. Confirmation of that would happen in 9 hours and 8 minutes. Because last time, we've been tracking the 12-hour stock RSI the whole time. It's been a key thing as far as knowing when a pump's going to come in or when we're bearish and we're going to continue heading lower. Right now, this is a great sign. Last time we did that, that was our big run up here. So are we in for another big run up like that? And we're going to have to see. But let's see the MACD. Yep. So it's trying to curl in. The TSI is trying to cross again. We're above the 0 line. That's a good sign. The RSI is above the 50 line. But I would say we need to see some more come in. Let's go to the 6 hour. Yeah, we need to see some more come in the short term so we can see those bigger, higher time frames really convert and see the momentum head up. So let's Let's look at the daily chart. So the daily chart's trying to cross up. That's why we needed to see the 12-hour really go, which will come from the 6-hour, because the smaller time frames spill into the medium time frames, which spill into the higher time frames. So very important for the daily to cross up and the MACD not to flip red here and for us to continue going up. So let's go to the 3-day chart. Right now we have the 200-day moving average sitting right at 27,550. So if we do pull down, that's a key level we need to hold above. So watch that level. Right now we are seeing the EMA ribbon flip from red to green, which is a great sign. If we do pull down, I would like to see us hold above the 200-day moving average, not come down now and test that. But maybe we just kind of range sideways, have the EMA ribbon come up, and that would act as our like bounce pad. That's what I'd rather see. I don't want to see us pull down from that point. But maybe we have to. Maybe we have to retest these highs here because we didn't yet, because that coincides with that wick that came down, this rejection. So another key level is 25,500 to hold as support if we do pull down. If I go to the weekly chart, we're seeing that MACD, it's rising green, dark green. We see the TSI crossing up. We're getting close to the 0 line. We also had the pink crossing above the blue. Last time we seen that, that was back what brought us into this bull market. And then really looking at the EMA ribbon here, we're above it right now. So this is all solid. We need to see us maintain above that level. So yeah, short term is really going to be critical to watch right now, because that's going to tell us what's going to happen in the macro trend. So yeah, we're right at a key level. So I want to see us keep pushing up here, to be honest. I don't want to see this baby slow down. So we're 30 to 33K is going to be a critical level as well too. So we're going to have to watch that for area of resistance to come in. But if we kind of plow through that, man, we could be seeing 40 to 44 in no time. So that is what I'm watching there. But macro trend screaming momentum to the upside, but we need to watch the smaller time frames to be able to gauge whether that's rolling over or not. XRP sitting around 0.5433, huge, absolutely huge. It's been a top performer. Same with XLM, same with like Algo. And on the 12-hour chart, we're right on top of this area of resistance here. So we actually got higher than any moment. Let me turn these off. Yeah, we got higher than this high that we set back in September 2022, but now we're back down. So let's see where we're sitting at right now. Right here. Yeah, so that was the level of rejection. So if we can maintain the short term above this level, we're going to see more. Yeah, also have a trend line coming up like this, acting as an area of, or like a little bouncing pad. So like we're at this kind of conjunction between the horizontal area of resistance from back in the day that's now acting as support, plus this trend line that's carrying us up. So I want to see us maintain above 0.5333. Yeah, I would say that, like that level right there, or just 0.53 cents. Yep. And then I want to see us now start to take out some of these extension levels. So high to low right there. We got 78 cents in the cards here. If we do pull down, the most critical level to hold is 0.49. 0.49 and a half. If we do come down, critical level to hold. That's where the 786 was. I don't want to see us break down from that point. At this point, that was our breakdown level. And then we came up. That was our rejection level. Couldn't get above. So if we do pull down, that's where I'd want to see us maintain. And I wouldn't, panic if it comes down to there. It's not like it's just going to flash down in 1 hour back to 30 cents. You have some time for these things when they pan out. So we don't want to kind of sell off, panic, and then all of a sudden it gets bought up real quick and goes higher. So just maintain cool, calm, collected. Check the XRP signals in the automated channels and see kind of what it's flashing, or pull up your charts with the Stargate software, because we do have some prepare to sell soon on some higher time frames. So that's on my mind. But we have to see the lower time frames, like the 12-hour, 9-hour, 6-hour, 4-hour, the momentum to curl over and the sell. Now's the flash for us to take some action here. So for now, so far so good. But I'm going to be covering XRP and XLM more in depth in that video later today anyways. So I'll get into that more. XLM right now around 10.5 cents. Let's go to the 12-hour chart. Yeah, we're pressing up even higher. Oh, no. We're just kind of maintaining around the same level. So we do have some 12-hour prepare to sell soons, but I'm going to hide that because we're going to cover that later. And let's look at, we have the momentum coming down a little bit though. So I want to see something today Really want to see something today out of these coins to really signify that the momentum is much higher. We had the 200-day moving average sitting around like 10 cents flat for XLM. So that's a key level for us to hold if we come back down. This kind of reminds you of XDC. When we called XDC, I think it was 2 weeks ago in the group session, it just got above the 200 moving average. It was kind of just right here. And then all of a sudden we came up. That's what I'm expecting for Stellar as well too, to probably hit the 12.5 cent level on first. Let me pull up that high to low. 11.5 cents. I think right here. We're right at the 786 of this low to the high. We're right at there. I really want to see us get above it and maintain see a candle body close above it as support. So 10.5 cents. The end of today, I really want to see that, because then we can start targeting the 11.5 and then maybe even get up to 16 to 20 cents if we can do that. Maybe pull like a XRP type of run, XDC type of run. So that's what I'm watching there. I'm going to leave it off at that because I'm going to cover these more in depth later today. So that's going to be it, guys. I'll see you in the Discord and in the next video.